Hello and welcome to World Insight, coming to you live from Beijing on CGTN. We begin today's program with the London Stock Exchange. Last Friday, it announced it would refuse the $39 billion offer from the Hong Kong Stock Exchange to consolidate the two financial hubs. It said the proposal was, quote, preliminary and highly conditional, amid doubts about political risk and deal structure. The London Stock Exchange has long sought to bolster its presence, according to itself, in Asia, and recently launched a link scheme with the Hong Kong Stock Exchange competitor in Shanghai. Let's take a look at how complicated the whole picture is. It's really fun.
The London Stock Exchange says it sees no need to further engage with the Hong Kong Stock Exchange, after the Hong Kong rival said it would press on with an offer to take over the London bourse. This came after the London Exchange refused an unsolicited offer from Hong Kong, citing concerns over key aspects of the conditional proposal, including strategy, deliverability, form of consideration, and value. LSE's chair Don Robert criticized Hong Kong EX's chairman Laura Cha and CEO Li Xiaojia about the decision by the Hong Kong Exchange to publish the unsolicited proposal within 2 days of receiving it. He added that it represents a significant backward step for the LSE group in combining with the Hong Kong Exchange. It was the highest ever takeover offer for a stock exchange, valued at about $36 billion. However, the board of the Hong Kong Stock Exchange says the merger with the London Stock Exchange could create a global market infrastructure leader. The surprise bid comes amid political uncertainty hovering over the UK due to its pending exit from the European Union and ongoing protests in Hong Kong. So what does that mean to Hong Kong's economy?
I guess the question is more than just the Hong Kong economy. For more on the Hong Kong Stock Exchange offer to the London Stock Exchange, in Hong Kong we have Ronald Wan, Chief Executive at the Partners Capital International. Joining us in Brussels in Europe, we have Carol Lanu, who is the Chief Executive of the Center for European Policy Studies and also has been quite active in the financial analysis circle. In our Beijing studio, last but not least, Liu Zhiqian, Senior Fellow at the Chongyang Institute for Financial Studies from Renmin University of China. Gentlemen, welcome to our program. First of all, Mr. Van, going to you. It's much more complicated than just a proposal and refusal of the proposal. What exactly is the real essence you are seeing in both the possible to bid and the interaction so far?
Yes, I think this strategic acquisition made by Hong Kong Stock Exchange is very carefully planned, because the Hong Kong Stock Exchange wants to maintain its status and its competitiveness as the international financial center of China. So actually, it's also hope to build an offshore platform by acquiring London Stock Exchange, and also to build up a 24-hour trading circle so that Chinese company can tap both Hong Kong stock market and London stock market. This is a very clever move for the Hong Kong Stock Exchange. Of course, the timing is very sensitive, because Hong Kong is facing a lot of competitions, both internationally and also domestically. And from the perspective of London Stock Exchange, I can understand that, because they want to maintain their independence in the first place, and also they're not sure whether Hong Kong is the platform, for them to work with China. So I think the things are very complicated. So everyone wants to work for a good deals and also work for the best deal for each other. And how to create a synergy, in fact, I think it is need to see.
Yeah, it is. We will have to wait and see. Nothing is yet certain at this point. That's why it's a lot of fun going on in this real story. Mr. Lanu, what do you make of the recent tango you see between the London Stock Exchange and the Hong Kong Stock Exchange? It's not just about just a deal. It's a lot of things behind it, Mr. Lanu.
Yes, of course it is, as the previous speaker was saying. Let's say it's a tie-up between two of the most important financial centers in the world, and by this overcome kind of the limitations which they have because of the time zone in which they are placed. But of course we know, let's say, there are political problems on both sides as well in the UK as in Hong Kong, which makes it even more kind of difficult, let's say, to above all to sell this deal. But let me look, let's say, basically at the business case of both deals. Look at what London has done over the last 10 or 15 years, how London has grown. Certainly the London Stock Exchange, not only London as a financial center, but also London Stock Exchange as the most operator in Europe, also through acquisition of the Italian Stock Exchange, its stake also in the major CCP in Europe, which is the London Clearing House. And then now they had planned, let's say, to have an acquisition of Refinitiv to move into the data business even more than they are already. So they already had a clear strategy, and all of a sudden comes this takeover from Hong Kong, from a partner which they basically on itself couldn't refuse, because everybody knows that Asia is the future, and certainly for London, Hong Kong has a special status. So having a major kind of partner in Asia would be an enormous step forward. So
that's right.
It is all of a sudden adds to an extremely complex situation where they were already in this Refinitiv deal, basically the former Thomson Reuters business, and then in addition all of a sudden comes this Asia dimension. So if I were to be a shareholder, it would be very puzzling for me whether I would choose the one or the other.
Mr. Lanu, the details that you brought up is extremely exciting, because Refinitiv, you know, this specific company, when it comes to acquisition of that, the argument from the London Stock Exchange shareholders is that it's going to add more possibility for London Stock Exchange to operate in emerging economies and attract attention from emerging economy capital, certainly as well. But then if a merger or acquisition could happen with the Hong Kong Stock Exchange, that's going to be much more direct when it comes to you know, a share of the emerging market. So Mr. Wan, I want to come back to you about that. This is exactly one of the most important things in this whatever bid or offer to bid or proposal to bid. This is the real thing here, Mr. Van.
I think this is the real thing. I think the Hong Kong Stock Exchange is working on it seriously, and they have some time. You know, even though the London Stock Exchange, the board of directors rejected the offer, still the Hong Kong Stock Exchange can bid, you know, early in October. How they going to finance the transaction? It basically is a cash offer. You know, it's look very attractive to the London Stock Exchange shareholders. They are talking to the shareholders of the London Stock Exchange as well. But when you talk about this financial aspect, financial burden to the Hong Kong Stock Exchange, it's still yet to see. You know, how they're going to work out the synergy between both you know, stock exchange, how to create something which Hong Kong Stock Exchange can deliver to the London Stock Exchange, because Hong Kong Stock Exchange acquired London Metal Exchange a couple of years ago, and it is yet to bring the China element to the exchange itself. So London Stock Exchange, and this time, you know, will need something really solid, and how to help the London Stock Exchange to tap into the China market. This is something which we need to look at very closely, and how they're going to materialize everything carefully.
Exactly. And let me also have also Mr. Liu sitting here with us in the Beijing studio. You see the desire from both sides. Now, London Stock Exchange want to have more possibilities, certainly here in the emerging markets. Asia, of course, big part of it, whether it's Shanghai or Hong Kong, you name it. Meanwhile, Hong Kong Stock Exchange is not like it's nobody. It's a very big and strong stock exchange in Asia. Meanwhile, it just acquired LME. So it's not that it's not knowing what it's doing, but rather it knows very well. Only the timing is interesting. So let me ask you, Mr. Liu, about this. What does it mean at this point, the attractiveness of the emerging markets for stock exchanges around the world that reflected in this quite a bit drama just over the past 1 week between the two exchanges?
When we are talking about this business action, we have to say another word, that if we can see whether this merger is a value-added merger. I think the desire from Hong Kong Stock Exchange is a value-added, to buy or to take over the London securities stock market. This is a very cautious, a very aggressive desire for Hong Kong stock market.
So you don't think it's so-called abrupt, just like the board of the London Stock Exchange said?
No, I don't think, because this is a long time for Hong Kong stock market to have such a desire, as we know that. Because we have to understand what's the difference between Hong Kong stock market and the London stock market, which is a strong point for each. The London stock market is very famous in the fixed income and also monetary market, but the Hong Kong market is mainly in the derivative products and also IPO market, especially for emerging market. If the both sides combined together, we can see how big, how important they will play in the world market, in the stock and the capital market, especially. So in this way, we can see such action could be realized if possible, that it could a good driving force for London and for China, also for Asia countries.
That's right. Mr. Lanu, that is the thing here, that some people only think about it politically, looking at, you know, the Brexit situation of the UK or the so-called unrest here in Hong Kong. But business is business, and it's a serious business that we are talking about here. So I want to have your comment here, Mr. Lanu. What do you think could be the in the future, the prospect of this, whether offer or not, whether bid or not? Some even say it could be a possibility of a hostile takeover if the conditions were ripe. What do you say from your perspective?
I think personally, I think both possibilities make sense. I mean, so what London planned to do is to take over Refinitiv. I mean, that's already on the cards, but must be approved. That makes a lot of sense, because the data business is the financial data business is where a lot of growth is expected. And we know there's basically only one big operator in the world apart from Refinitiv or Thomson Reuters, and it's Bloomberg. So this is a growth market, and there will be need for more data in the years to come. Of course, if you have, on the other hand, the possibility to expand to Asia, as was just explained, in the sense that you have a market there which has more in IPO and equity, and then the London market has other specialization, purely its core trading platform business, that also makes sense. And on top of that, let's say the financial value for the takeover from the Hong Kong Stock Exchange is higher than probably the risk of the takeover of Refinitiv, which will be, very costly for the London Stock Exchange. Yes, then you have to compare both offers. But of course, what you cannot underestimate, certainly from a European perspective, is the political risk, not only because of Hong Kong, but also because of the overall kind of business climate in China. Will there be a full freedom if Hong Kong takes over London in the way London is supposed to operate until today? Will there be a full freedom of operating of the exchange in the future? Of course, for this we have an international law, we have principles like equivalence, just to make sure that the regulatory environments are the same on both sides.
Right.
But I think if you were to ask Europeans here in Brussels or all over Europe, specialists, many would have great doubts in the way, how independent the way is in which the Hong Kong Stock Exchange is functioning, or how independent the supervisory body of the Hong Kong Stock Exchange is, and whether it's basically, if something doesn't please China, that China will intervene in favor of its own interest if something is happening on the Hong Kong Stock Exchange.
All right. So,
and that is the thing which I see from European perspective. Of course, it's on top of that, as you were saying, it's a hostile takeover. On top of that, and the current CEO will prefer to remain the CEO of the London Stock Exchange rather than to have a CEO of Hong Kong.
Yes. Well, those are certainly details, but the details also matter from time to time when it comes to such a possibility. But let me ask you, Mr. Liu, now, Mr. Lanu, just to voice some concerns of some investors, and also from those that are shareholders of the London Stock Exchange, whether the stock market and the stock exchanges will remain its independence, free from political influence, whether it's one kind or another. So, Mr. Liu, what do you make of concerns such as those expressed by Mr. Lanu? Certainly those are also shared by some of the others. Mr. Liu.
I think this concern is not surprising us, because we know such concern existing already for some time, especially in recent times when the riots happened in Hong Kong. But actually, I have to say frankly that all this so-called government interference from the mainland to Hong Kong Stock Exchange has never happened, as we know that, because Hong Kong Stock Exchange is still independent. Right. It has been operating under its own law and rule regulation. That's why Hong Kong Stock Exchange has so good confidence and faith in the world market. Many investors are coming to Hong Kong to have more invested. So this is the real reason that the Hong Kong Stock Exchange can be existing so strongly and very actively and positively in the history. Nowadays, if the merger with the London Stock Exchange, I think nothing will happen, because the mainland is happy to see the progress for both sides, and no reason, no need to interfere of this business, especially in the
but
business.
people would say, oh, what about the competition between, let's just say, Shanghai Stock Exchange, Shenzhen Stock Exchange with that of Hong Kong? Will that be one reason for anybody to intervene?
No, I think the competition is a word from Western business circle. It's welcomed by all over the world. Competition is not a problem, but how to compete is another question. But actually in China, we are still abiding all the international law to have a fair competition, transparent, and in fairness. So this is the very important precondition for all markets, especially for China also.
I see. Mr. Liu certainly talking about the important aspirations. Let me go to you, Mr. Van, about that. The Hong Kong Stock Exchange, how it operates, just as many of the issues related to the one country, two systems, and whether people should have much hope and confidence in the operation and the future of the Hong Kong Stock Exchange, which is a very important stock exchange here in Asia, to say the least. Mr. Van, you go ahead with your understanding as an investor.
Yes, Hong Kong is a special administrative region of China, of course. But Hong Kong Stock Exchange is an independently run stock exchange. Even though Hong Kong, as our government is the largest shareholders, but still, I don't think that government interfere in the operation of the stock exchange rules and regulations. Of course, we also see that Hong Kong has an advantage over other international financial centers in China, because Hong Kong has no foreign exchange control for the time being. So basically, Hong Kong Stock Exchange want to maintain its competitiveness as a global financial center and a fund IPO center as well. So it basically run autonomously and also without interfere from the government, and it's very commercially minded, basically geared towards full operation as a listed company, and it is wholly accountable to the shareholders and investors all over the world. So basically, I think its acquisition proposal, basically, is part of its expansion plan. I think it is purely commercial. Of course, this can help China and Hong Kong as well. That is a side benefit of the proposal. It's a all-win situation for everyone.
That's right. Mr. Van, if I could just very briefly from you also, but the other way could also be a concern, whether whether London Stock Exchange will have some kinds of political interference from certain governments or from certain political forces from either Europe or other parts of the world, you know what I'm talking about, in terms of working on a real, pure business deal. Are you concerned from Hong Kong?
Yes, actually, I think this transaction, from Hong Kong's perspective, is purely commercial. But when you talk about London, well, it has interference from the government and from other cross-border regulatory bodies. And I think that some investors, some regulatory bodies in the States or even in UK, we think that it is a takeover from China's government. So I think that this sort of perceptions, this sort of interference will affect the success of the acquisition proposal eventually. This is something which we need to care about.
That's exactly why we need to discuss it. Mr. Lanu, we have very limited time, 40 seconds for you also, just to be fair, to respond to that question. Whether should we be afraid of any political interference when it comes to London Stock Exchange attitudes about any possible deal with the Hong Kong Stock Exchange or others coming from the mainland?
Of course you can be afraid, because you see what is going on also from your perspective in London at the moment, and London wants to break away from the EU, wants to take back control, which is the UK government. And of course, if the UK government sees something like this happening, even if it were to be a huge contradiction, it may protect what they call the old lady. The old lady is the London Stock Exchange, the name which you often see in the newspapers in the UK. So it would be a contradiction in terms, because we know
Yeah.
that Theresa May and also Boris Johnson are fully in favor of concluding free trade agreements all around the world. But
Okay.
if they see this happening, they may prefer to keep the London Stock Exchange in local hands.
Well, we'll see what's going to happen to the old ladies, as you say, quoting your word. The Hong Kong protests, though, have hit the city that we were talking about, the city of Hong Kong, where it really hurts economically. Earlier this month, global credit ratings agency Fitch downgraded the Hong Kong's rating one notch from AA+ to AA rather, effectively labeling it as a risky borrower. Bloomberg also reports in some of its media reports in the past 2 months, over $600 billion were erased from the stock market. Meanwhile, the city's second quarter GDP for 2019 shrank almost 0.5%, and multinational bank DBS forecasts Hong Kong's GDP for the year will remain flat at 0%. Now, those are the effects of some of the recent unrest going on in Hong Kong on its economy. We really hope that things will clear up in the very near future. Before we go, what is your immediate hope for this deal or no deal between the Hong Kong Stock Exchange and London Stock Exchange as investors and as analysts? Mr. Liu, you go first. Very briefly, 20 seconds for you, everyone. Mr. Liu.
I think this is a time for both sides to have a bargaining time. So we hope to find a good solution from both security stocks and market, because it will benefit the people of the two countries and
Right.
also Asian countries.
I guess so. For all economies, as long as the two exchanges are also having win-win here. Mr. Van, 20
Yes,
seconds.
I think this is a good deal. Yeah, okay, this is a good deal for all countries and all cities and also the exchange involved. Basically, I think as long as a viable commercial plan can be devised, I think this deal should go ahead, and it will create an all-win situation for all the countries and all the stock exchange and all the cities and involved. Yes.
A lot of wish over there, Mr. Lamu. 20 seconds as well. Go ahead.
No, for me, let's say both deals are interesting, the deal with Refinitiv or the deal with Hong Kong Stock Exchange. But the thing is, most important thing for me is it should be a wake-up call for Boris Johnson, that if you have, let's say, this ongoing, let's say, for a long time already problems around, will they leave the EU, yes or no, and the impact it has on the exchange rate. At the moment, let's say the pound sterling is valued very low. If it goes on like this, there will be many other companies in the UK which will be taken over, because their purchasing price is much lower than it should be. So let them think about the core issue, which is make sure that they know what to do with the EU and they have their economy right.
All right, one could tell that is the voice coming from Brussels. Thank you so much for the three of you joining us on this very interesting discussion. Thank you. Carol and Nu, round of one. Last but not least, Liu Zhiqing. Really appreciate it. Thank you, gentlemen.
Thank you.